All right, so you're busy and you want to get smart fast on like what really matters.
Absolutely.
And today we're going to dive into this kind of interesting analysis that's come across my desk.
Okay.
It seems like everywhere you look, there's all this global uncertainty, right?
Yeah.
But this analysis is saying that India is actually like in a really strong economic position in Asia right now.
It's interesting.
So we're going to cut through those like surface level headlines
Right.
and really understand like the thinking behind this kind of more optimistic view of India.
Yeah, I think that makes sense. And like you said, everyone's so busy and it's hard to keep up with everything.
Yeah.
It's like, I feel like people just see a headline and they just move on.
Right, exactly. And so we want to go deeper.
Exactly.
So you sent over this report. It's called MS Research, Why India is Best Placed in Asia .pdf.
Ah,
And I think that's a great place to start.
yeah, definitely. And I think the core question we want to answer is, what is it about India's current economic situation that makes this research so positive about its position, in the Asian landscape?
Right.
And the report kind of lays it out in 5 key questions.
Okay, perfect. So let's just like take those one by one.
That
and
sounds good.
Unpack them.
Yeah.
So the first one's kind of getting right at this. Like, we said India's doing well,
Yeah.
but there was this recent slowdown in India's growth.
Mm.
And even like the recovery was a little bit sluggish, right?
Mm-hmm.
And, it wasn't like there were obvious alarm bells ringing.
Right.
So what happened?
Yeah. So I think what's interesting and a key distinction off the bat
Okay.
is that the report emphasizes the unexpected nature of this slowdown.
Okay.
So, it wasn't triggered by the usual suspects that you see in a lot of like emerging economies.
Right.
Things like crazy high inflation or a massive current account deficit or, unsustainable levels of private debt.
Right. Those like classic sort of warning signs.
Exactly. The classic red flags.
Right.
Instead, the analysis really points to this almost like self-inflicted slowdown. They call it an unwarranted double tightening of fiscal and monetary policy.
Okay, so that's interesting. So it's almost like India's slowdown wasn't because of like these vulnerabilities,
Yeah.
but more like a deliberate policy choice?
Exactly.
Interesting. Okay, so double tightening.
Right.
Let's unpack that. Like,
Yeah.
what did the government and the central bank actually do?
Okay, so on the fiscal side, right, so that's government spending, which, is a huge chunk of India's economy.
Right.
They actually like decreased spending.
Okay.
And the report mentions it like bottomed out at -6% year over year in July 2024.
Wow.
And what was really surprising was how slowly government spending on things like infrastructure, which we call like, capital expenditure, CapEx, picked back up.
Right.
So it actually averaged -12% between May and November 2024.
Oh, wow.
Before it finally recovered to 37% year over year in January 2025.
Okay, so it's like they slammed on the brakes.
They slammed on the brakes.
And then really slowly started to ease up.
Exactly.
Okay, and what of the central bank?
So the monetary side.
Yeah.
So there are a few things going on.
Okay.
So first, the Reserve Bank of India, they raised interest rates.
Okay.
Second, there was less money available in the banking system, or what we call liquidity,
Right.
which basically makes it, more expensive for banks to lend.
Right.
And then third, they also tightened some regulations.
Okay.
Specifically, they increased the risk weights for unsecured consumer loans.
Okay. And just for people who aren't familiar with that term, like what are risk weights?
Yeah, so basically you can think of them as a measure of how risky a loan is.
Okay.
So like a higher risk weight
Okay.
means that banks have to set aside more capital for those loans.
Right.
Which can make those loans, less attractive to issue, and that can kind of impact, consumer borrowing.
Right. So it's like they're trying to rein in
Exactly.
risky lending.
Yeah.
Okay. So you have the government pulling back on spending, especially on these longer term investments.
Right.
And then you have the central bank making borrowing, more expensive and less accessible.
Exactly.
And that kind of explains how you could get a slowdown,
Right.
even without those like traditional warning signs.
Exactly.
Now the report goes on and it talks about what's going to drive the recovery going forward.
Yeah.
And the tone of the report definitely shifts
Yeah.
to like a more positive outlook. Right?
Absolutely. It becomes quite optimistic about the recovery, picking up speed.
Yeah, and they're already starting to see like these early positive signs.
Right.
We even call them green shoots.
Yeah.
And one of those is the accelerating growth of goods and services tax, or GST revenue.
Uh-huh.
And just so everyone's clear, GST is like,
Yeah,
it's
you can define
it's a sales
the
tax
sales tax.
across all of India.
Exactly.
And so when they're saying that GST is going up, it means,
Yeah, it generally means more goods and services are being bought and sold.
right, so there's more economic activity happening.
Exactly.
And this revenue grew by an average of 10.7% in January and February 2025.
That's pretty solid.
Yeah. And what's even more interesting is if you adjust for that extra day in February,
Right, because of the leap year?
because of the leap year, yeah, the growth actually jumps to around 12.6%.
Wow.
And that's compared to a lower 8.3% in like the last 3 months of 2024.
Yeah, so that's a big acceleration.
Huge
It's
acceleration.
huge.
Yeah.
Yeah. So things are definitely picking up.
Yeah. So aside from just like the GST revenue, what are the main things that are expected to actually like power this recovery going forward?
Yeah, so the report actually identifies 4 key drivers.
Okay, perfect. So let's go through those.
All right, so first is sustained government spending.
Okay.
And we've already talked about how that was a little bit slow to pick up.
Right. They slammed on the brakes.
But the report emphasizes this, really significant acceleration in CapEx growth, starting like late last year.
Right.
In December 2024 and January 2025.
Okay.
And looking ahead, the government's budget for this year, 2026, anticipates a solid 10.1% year-over-year growth in central government CapEx.
Right.
And then if you include those grants to the states for their own infrastructure projects,
Right.
the total expected growth is even higher at 17.4%.
Yeah, that's a significant.
Huge
Yeah.
chunk of change.
Yeah, so that's a big commitment to public investment.
Yeah, for sure. Okay, what about number 2?
Okay, so the second key driver is what they call a triple easing of monetary policy.
Triple easing.
Yeah. So basically, they're easing up the pressure on the economy in 3 ways.
Okay.
First, policy rates.
Okay.
The real policy rate, which is the interest rate minus inflation,
Right.
has already decreased from a peak of 3.4% in June 2024.
Up to 2.5% in February 2025.
Okay.
And they expect even more interest rate cuts coming up.
All right, so that's number 1, easing up on rates.
Exactly.
What's number 2?
Okay, so the second aspect is liquidity conditions.
Okay.
So that weighted average call rate, which is like the short-term borrowing cost for banks,
Okay.
has fallen from its peak in December 2024, and it's actually now below the main policy rate.
Wow.
And this is partly due to the RBI being more flexible in how they manage the currency
Okay.
and injecting money into the system when needed.
Right.
And basically, when there's more money available in the banking system, it can become easier and cheaper for banks to lend to, businesses and individuals.
Right. So it's loosening up that credit.
Exactly.
Okay, what about number 3?
So the third part of this triple easing is regulatory measures.
Okay.
And the RBI has already started to reverse some of that earlier tightening.
Right.
For example, rolling back that increase in risk weights for bank credit to what are called non-banking financial companies.
Okay. So you can really see how they hit the brakes.
Yeah.
And then now they're easing up in all these different ways.
So it's like a coordinated effort.
Exactly. It's very coordinated.
Okay, awesome. What about driver number 3?
Okay, so the third driver is, I think, a welcome development,
Okay.
a moderation in food inflation.
Okay, that's great.
Right. So this is so important
Yeah.
because when food prices go up, it really hits household budgets hard.
Yeah, no one wants to pay more for groceries,
Right. Exactly.
for sure.
So food inflation has come down from a peak of 10.9% year over year in October 2024 to 6% in January 2025.
Wow, so that's a pretty big drop.
It's a big drop.
Yeah.
And that's helped bring overall inflation down to a 5-month low of 4.3% year over year in January 2025.
Okay.
And the expectation is that this trend will continue,
Yeah. So inflation's coming down.
Yeah.
Food's getting cheaper.
Exactly.
People have more money in their pockets.
Right.
It's good for the economy.
Yeah. All right. And driver number 4, the last one.
Okay, so the fourth driver is something that I think is really interesting. It's the strong growth in India's services exports.
Okay. So this is like a different part of the economy that we've been talking about?
Yeah, it's like a structural shift that's been happening.
Okay.
So these are things like IT services, business consulting software.
Okay.
And these have almost doubled since December 2020.
Wow.
And they've been growing much faster than goods exports.
Okay, so India is becoming more of a services economy.
Exactly. And what's really significant here is that India's share of the global services export market has actually been increasing.
Oh, wow.
And services exports tend to be more resilient than goods exports, during those global economic slowdowns.
Right, so it's almost like they're less exposed
Exactly.
to like the ups and downs of global manufacturing.
Exactly. They're not as susceptible to, like a global manufacturing downturn as some of their neighbors.
Right.
So it's a really significant development.
That's super interesting. Okay, so we've gone through all 4 drivers now.
Oh, we have.
The report goes on to ask, will this recovery in consumer spending actually become more widespread?
Right, because so far it's been kind of concentrated in certain areas.
Yeah, and we've touched on some of these things, but what are the specific things they see leading to broader consumption growth?
So the report actually points out that private consumption has already shown like a decent recovery,
Yeah.
and the growth in sales of everyday consumer goods, what we call FMCG,
Right.
fast-moving consumer goods has picked up, particularly in rural areas.
Okay.
But looking ahead, they identify 5 factors that should broaden this recovery even further.
Okay, let's go through those.
Okay, so first, those tax cuts for lower and middle income households that
Yeah.
were announced in the budget,
Yeah.
those are expected to boost spending, especially in those urban areas.
Okay.
Second, the continued improvement in real incomes thanks to moderating food inflation, that will especially benefit those lower income households who spend a larger portion of their income on food.
Right. Their budgets are more stretched, so
Exactly.
that extra money really helps.
Exactly.
What about number 3?
Okay, so third, it seems like the job market has turned a corner.
Okay, great.
Job creation appears to have bottomed out, and it's now showing signs of picking up,
That's great.
which is great.
Yeah.
As indicated by like the Naukri job search index.
Okay.
And then fourth, that strong growth in services exports.
Right.
That should lead to more job creation in urban areas and consequently higher urban consumption.
Right. So there's like a little bit of a lag.
There's a bit of a lag, yeah.
But eventually all those export earnings turn into...
More jobs and more spending. Yeah.
Okay, and number 5, the last one.
Okay, so fifth. And finally, there's the expectation that the RBI will further ease regulations on consumer credit.
Okay, so even more easing.
More easing, yeah.
Okay.
And they might do this by returning to those previous lower risk weights, which would make it easier and cheaper for households to borrow and spend.
Right. So it's like all these different things are kind of working together.
It's like a confluence of factors, all pointing to stronger consumption.
All right. That's awesome. So the next question the report asks is, what's the outlook for CapEx?
Right.
We've already talked about the government's role.
Yes.
But what about investment from the private sector?
Right. So that's a good question. And government CapEx is definitely like the main driver for this overall recovery and investment.
Okay.
The report notes that the combined growth in spending by the central and state governments has stabilized.
Okay.
And more importantly, as we've discussed, the growth in capital expenditure by the central government has really accelerated.
Right.
And the budget signals a continued strong push on both central government CapEx and grants to the states for their own CapEx projects.
Right.
However, when we look at the private sector, the expectation is for like a more gradual and potentially slower recovery.
Okay, so why is that? What's holding back investment decisions by private companies?
So the primary concern is this, increased uncertainty in the global economy.
Right.
And the potential for slower growth in goods exports.
Yeah.
And even though India's economy isn't as reliant on selling, manufactured goods abroad as many other Asian countries,
Right.
a weaker global environment is still going to, likely dampen investment in manufacturing.
Right.
The report does say that India's lower dependence on goods trade does offer some protection.
Okay.
And that this ongoing easing of monetary policies should help encourage, private investment.
Right.
But overall, the expectation is for this more cautious and gradual pickup in private CapEx compared to that more aggressive government-led investment.
Right, so it's almost like the government's stepping in to fill the gap,
Yeah, exactly. They're really taking the lead.
while the private sector kind of waits to see what happens.
Exactly, a bit more of a wait-and-see approach.
Okay, that makes sense. So now the last of the 5 questions is about, tariffs and the overall trade outlook for India.
Right.
Can India avoid tariffs?
Yeah.
Is a trade deal with the U.S. likely?
Right.
And this is really interesting, especially given all this global trade tension.
Yeah, absolutely. This is a complex area with a lot of moving pieces.
Yeah.
And the report does acknowledge that India faces some direct risks
Um,
related to tariffs.
Okay.
It points out that India has relatively high tariffs on certain imported goods, significant what we call non-tariff barriers to trade,
Right.
and a surplus in its goods trade with the U.S.,
Right.
which makes it a potential target for those retaliatory tariffs.
Right.
They even mention the possibility of tariffs being imposed on exports of pharmaceutical products from India,
Okay.
which make up a noticeable portion of their overall exports.
Yeah, so it's like they're exposed on a couple of fronts.
Yeah, exactly.
Okay. So what's the expectation on this potential trade deal between the U.S. and India?
Right.
And how might that change things?
Yeah, so the report suggests that a deal is likely, but potentially not until the fall of 2025.
Okay, ways off.
Yeah. However, they do point out that reaching an agreement could be challenging,
Right.
given the various existing issues in their bilateral trade relationship.
Right, low baggage.
Yeah, a lot of baggage, exactly.
Okay.
So more immediately, they say that India is unlikely to avoid those reciprocal tariffs that are scheduled to take effect on April 2nd.
Okay.
And that tariffs could even increase further in the period, before a deal is finalized.
So is it like a game of chicken a little bit?
Yeah, it has that feel, doesn't it?
Yeah. Okay. So why is a formal trade deal actually necessary for India to lower tariffs just on goods from the U.S.
Right.
without having to lower them for, like, everyone else?
Yeah, so that has to do with the WTO rules.
Okay, the World Trade Organization.
Right, the World Trade Organization.
Okay.
And it's their most favored nation principle. And basically what that means is that member countries generally can't discriminate between their trading partners.
Right.
So if India were to lower tariffs on imports from the U.S. without a formal trade agreement,
Yeah.
they typically have to extend those same lower tariffs to all other WTO members.
Okay.
A free trade agreement provides an exception to that rule.
Okay. So that's why it's so important.
Right, it gives them that flexibility.
Interesting. Okay. So we've talked about the direct risks from
Yeah.
tariffs.
Yeah.
But the report also mentions these potential indirect effects.
Right.
So what are those and how vulnerable is India to them?
So the report emphasizes that these indirect effects, which are things like, a decline in business confidence due to the uncertainty.
Right. People don't know what's going to happen.
Exactly.
So they hold back.
Right. And that can have knock-on effects on capital expenditure and, the overall flow of trade.
Yeah.
Those are likely to be more significant than the direct impact of the tariffs themselves.
Okay. So it's more about like the chilling effect on the overall economy.
Exactly. It's that uncertainty.
Yeah.
From that perspective, India is considered less vulnerable than
Right.
a lot of other economies in the region.
Right.
Their economy is less reliant on goods exports.
Right. We've talked about that a lot.
And their domestic demand is relatively strong.
Yeah.
But they do say that, the challenging global environment is still going to exert some downward pressure on India's growth.
Right. Nothing happens in a vacuum.
Exactly. Through weaker demand for their goods exports and potentially lower investment in manufacturing.
Right.
So it's important to keep an eye on the growth of what are called capital goods imports in both Asia and India as a kind of indicator of future investment trends.
Okay. So it's something to watch.
Yeah, definitely.
So we've gone through the whole report
You
now.
have.
What's the main takeaway?
So I think the key takeaway is that despite that recent unexpected slowdown in growth,
Right.
this analysis suggests India is actually in a really good position within Asia.
Okay.
Given these global economic uncertainties.
Yeah. And this is largely because they expect this rebound in domestic demand,
Right.
which is being driven by, continued government investment,
Yeah.
that easing of monetary policies,
Right.
the moderation in inflation,
Right.
and the, impressive performance of India's services exports.
Right. So all those things we've been talking about.
Exactly.
Yeah.
And so that strength in domestic factors really gives them a big advantage,
Yeah.
even as, global trade faces these headwinds.
Right. So it's a much more detailed and nuanced picture
It is, yeah.
than you often get from just reading those headlines.
Absolutely. And I think understanding these underlying factors
Yeah.
really gives you a better sense of why this analysis is so optimistic
Right.
about India's prospects.
Yeah. Okay. So to leave our listeners with something to think about,
Yeah.
given all this,
Okay.
how might India's economic growth path actually look different
Oh, that's a good question.
from other nations in Asia in the years ahead,
Yeah.
especially as global trade dynamics continue to shift? Yeah, that's a really interesting question and something I think everyone should keep in mind as they're watching all this unfold.
Yeah. Awesome.
Yeah.
Thanks for coming on the show.
Oh, it was my pleasure. Thanks for having me.
And we'll see everyone next time on The Deep Dive.
All right.
Bye.